The market briefing, 15th of November. Just going to try again here. You can all see my screen and hear me clearly, I hope. Just to talk about the market activity that we're seeing. Things have really slowed down, of course, since the end of last week. Equities holding on to their strength overall. If you just have a look at the S&P on a relatively long-term chart here, top left, there's quite a obviously this interesting quadruple top here, or triple top so far, really throughout the year of 2016. But more or less, you could say actually, really since the month of August, if you ignore the long wick of the Trump vote, we've been in a sideways range in the S&P, and we're still hugging on to those highs. European equities this morning have had a bit of a try to push higher, I'd say, on the open. The DAX pushing higher on the cash market open, trying to reach the R1 level of yesterday, finding a bit of resistance. What's been interesting is whilst the DAX, equities moving lower again, when you guys logged in, you probably saw me trying to go short the Euro stocks here. Can you see the red candle following the DAX lower? I was unable to hold it really. I took that off at the scratch, but now markets are really moving. DAX coming underweight here, guys, and the Euro stocks certainly following. Let's have a look now for potential levels for you guys to be aware of. Well, you've got the double bottom, or well, it's actually yesterday's low in the DAX was just above the pivot level on the futures market yesterday. That's at 1066 and 4. Without getting too excited, however, we definitely are still in this sort of post-Trump range, if you like, but European equities certainly looking heavy. So keep an eye out on that. And they're following bond markets lower, really, here on the bottom chart, bottom middle. You've got the DAX chart that I've shown you over the last couple of days, staying underweight, although the Bund, I should say. Although just now, on this perhaps European equity market sell-off, the Bund firming slightly. So we've got a very short-term element of risk off here. Unsurprising given the strength of the risk on that we've seen over recent days. So actually now that's the DAX just approaching the lows of yesterday, and below there you're really getting back to within Friday's range. So keep an eye on your European equities moving now as I speak. Other moves, well, the trend continues here in gold post-Trump. If we go to a slightly shorter term chart here, the reversals of these moves, I think taking a lot of the market by surprise just by the severity of them. But what you might have, as we go into another relatively light day today, what you might have is actually a bit of a retracement of these post-Trump moves. If I look at some Fibonacci's, will be interesting for you guys to try and bring out, looking for where potential market levels can be reached. We've got the high in gold that was hit overnight. That was hit again on the 13th, and a push above 1231 might see a look back at 1250 in gold, for example. Similar kind of moves to be expected in the dollar and T-notes. So if you have a look at T-notes this morning and overnight last night, just perhaps firming a little bit. The trend in T-notes over the last 2 days, the extent of the move lower in bonds, just pausing for thought perhaps. I would certainly be worried overplaying that dollar strength hand without assurance of actual policy change of what Trump is going to do. So just this morning then, you've got a bit of a reversal of the Trump moves. You've got bond markets higher, equity markets lower, the DAX pushing lower again, Euro stocks, you can see my lag on the right, new lows. You've got gold about to see if it can break above 1231. And all of that means, of course, for the dollar, yeah, you guessed it, have a look at the euro versus the US dollar this morning, although yesterday was actually another down day there. But the euro, actually, this is the strongest period for the euro for a couple of days, certainly Monday and Friday. This morning, the move in the euro looking at, what have we got? Yeah, just under 8% move in the euro versus the USD higher this morning. So as to be expected, the extent of the moves that we've had post-Trump, I think, have taken the market by quite a bit of a surprise. We obviously had German GDP come out this morning, and that was 1.5%. That's quarter 3, year on year, a preliminary reading. So An important reading for German GDP came out worse than expected. That's 1.5% versus 1.8% expected. We've got French CPI came out at 7.45, came out in line, 0%, 0.4%. You've got some relatively, it's not huge European data, Spanish data at 8 o'clock. Coming up now, so in 15 minutes time then guys, we've got the Italian growth rate, and this will be quite important. So that's coming out at 9 o'clock. Quarter on quarter growth for Italy is expected at 0%. Okay, so that's quarter on quarter. Year on year, looking at quarter three, growth is expected at 0.8% for Italy. So that's to look out for, guys, in 9 o'clock, just in 20 minutes time. 9:30, you have more UK data coming out, core CPIs, but it's 10 o'clock, then you've got the EU GDP growth rate. Okay, so year on year, the European Union is expected to grow at 1.6% only. So 1.6% only growth for the European Union as a whole. It's not good news, is it? So just to keep an eye out, that's Italian GDP growth and European GDP growth. I don't know if you're able to, but on your chart, on my charts here, if I look at FBTP, I've got Italian 10-year government bonds here. And the reason why I want to bring this up is Italian 10-year government bonds to me have been such a fascinating story, and it's one of those shoulda, woulda, coulda trades, if you like, that I've been thinking about for quite some time, but not actually done. The reason being is if you look back at 2014 for Italian 10-year government bonds, these were one of the best producing assets of the whole year. Can you see the chart here? An Italian 10-year bonds moving from just above 100 all the way towards 150. This was on expectation of Mario Draghi's quantitative easing program, which, as we know, took place early 2015. But Italian bonds yielding such low levels by the summer 2016. This move lower in Italian bonds really could be one of the main stories, I think, leading into 2017, especially given the election results that we've got coming up early December in Italian government bonds. So keep an eye out. The code for that on your CQG, by the way, guys, is FBTP for Italian 10-year government bonds. That's FBTP. If you are able to view it, do have a look. I think there's going to be some real major market corrections here. I'm just looking at T-notes on a monthly scale and in price, and actually if I add, let me add German government bonds to this just to give you guys an idea of the scale over the last 50 years or so. Sorry, not 50 years. We're going to go back 30 years. Add study, analog, Bund. I don't know if this really puts it into perspective for Bunds and T-notes, but certainly if you try and give them the same price back in the mid 2000s, T-notes, yes, they can certainly correct, but Bunds have a long way to go here. So is this the big bond correction? Well, look, it might be. By the way, guys, look at the euro versus the pound just this morning. Have a look at that in the euro, popping through the last couple of days resistance levels. The code for the euro versus the pound, EB, as we come up to have some more European data. Just a bit on the psychology then and the behavior of markets now. I know quite a number of traders who have been burnt over the last few days, especially those that really just can't believe how markets have responded to Trump. I was giving a lecture yesterday and I was looking at how HSBC were predicting the trading opportunities after the Trump vote. So let me just see if I can bring the slide up of the session I was getting, because it's certainly quite an interesting one to remember that really nobody knows. Nobody knows what's going to happen. And what's even more worrying is nobody knows how to trade it when it does happen. So let's see if you guys can see this screen. Let me just check. Yeah, can you see my HSBC trading outcomes on the Trump election? Just type a Y if you can see the slide rather than the charts. Yeah. and in the month twos. You guys, yep, you can see it, ready to go. Okay, great. So first of all, actually have a look at this in terms of what HSBC were predicting. Here, their outcomes are a Clinton win, or a Clinton clean sweep, or a Trump win. Actually, a Trump clean sweep wasn't even on the cards here. Then have a look at their trading ideas should there be a Trump win. FX, they're saying that will be US dollar bearish if there's a Trump win. Gold, decidedly bullish. US rates, lower yields. You know, these three, just on these three, they've got it perfectly wrong. So do bear that in mind when you're reading reviews, when you're reading analysis, you're reading reports. And I think more and more this is going to happen in our uncertain world. You know, institutions who are absolutely supposed to know what to do are getting it wrong. And it was the same for me with my personal trading. I took off gold long before Trump, and then after I found Trump won, I put that position back on, and then saw the position go offside and had to, you know, quickly take that position off for a loss of about 1% in the end. Would have been a lot worse had I still held it. So just reaffirming the need to be flexible and the need to trade in a way where you don't have to be right, okay? Trading in a way where you don't have to be right. And the type of execution that you're learning here with Amplify should be adding to that. And, you know, just saying here, practicing what I preach. You can see here, you know, by going long and scaling out of a trade, and much like Ben is showing you in the room, in his chart as well, you don't actually need to overall have been able to predict where the market will finish on the day. Only where is it going at this moment in time. Keep your eye on the euro, guys. Euro is still popping higher. Strength coming through in the European currency, which is, well, bearing in mind we have had poor German data, but we've got Italian growth data coming out in just 10 minutes time. So I'm going to leave you to trade that event. Risk off, equities lower, you've got bonds higher, and just this really small reversal of the post Donald Trump moves that we're seeing here in front of us at the moment. Okay, guys, I hope that's set you up for the day. I know Vas will be giving you a bit of a session as well. Piers, our head of trading, will be also filling you in, and I look forward to working with you throughout the day. Have a good session. Thanks very much.